started.
Well, Viet, how's it going?
Great, great.
Are you feeling pretty comfortable with this whole purchase decision that you've been working on?
Well, the price seems right. I'm just a little worried about the financing.
Well, you know what? We'll help you work through it. I mean, you really covered the big bases. You found the neighborhood, you found the home, you found the site. All that's good. Now let's take a look at financing. How have you thought about the type of financing that you're interested in, or are you familiar with it?
Well, I just heard the way to go is conventional, and I don't want any PMI or private mortgage insurance, or whatever they call it.
Mm-hmm. Okay. Well, yeah. Let me just show you something. You've had a chance to spend some time on our website,
Mm-hmm.
and just to show you, one of the things that we have is that if you go over here to our website and take a look under financing your new home,
Mm-hmm.
what ends up happening is that you go right here to the financing portion,
Okay.
and they've got several things that you can do. It talks about the different type of mortgages we have, how your credit is, the mortgage process, contacting RMC, our online loan worksheet, and mortgage calculators. Now, do you have any idea how your credit is?
Should be pretty good. I want to say I'm well in the 740, 750s.
Good, so you're in good shape there. Now, if you want to get a verification, one of the things that we do as a service to our homeowners is RMC Mortgage will do a free pre-approval for you. And you can just do your online loan application right here, and we don't charge a service for it. So to get started, all you have to do is click, hit go, and we can get that taken care of for you right away. How's that sound?
Great, yeah.
Now, you were talking about how much is it going to cost. If you come down here to mortgage calculators, if you click on calculator,
Mm-hmm.
take a look at this.
Oh, yeah.
Assuming a purchase price of $300,000 with a loan amount of $240,000, because that would be 20%. Now, if you want to get away from paying private mortgage insurance, essentially that's default insurance. Default insurance just basically says that the government has figured out statistically what percentage of individuals can default. Anybody that puts down 20%, you don't have to have default insurance. So what you would need to do is be able to put down $60,000. Are you in a position to be able to do that?
That's what we were planning. I think we have enough equity in our current home to do that. Yeah.
Great. And what kind of interest rates have you been considering out there?
I think everything's coming around 3.75 to 4, back and forth between the two.
Yeah, and I think you're really right on the money there. So let's go on the higher end. Let's plug in for the taxes are 1% of your purchase price. Insurance typically runs $300 per 100,000. So let's just click on it and see what the results are. So on a $300,000 purchase, putting 20% down, your principal and interest will be $1,146. Taxes and insurance $325, and you'll have a total payment of $1,471.
Yeah.
Does that fall within the range of where you want it to be?
Yeah, actually, it's a little less than our payment now. Yeah, and we'll have a newer home.
So you'll be ahead of the game. Now, have you thought about which lender you're planning on using?
I have a good loyalty towards Fifth Third. That's who has my mortgage right now, and they've been great to work with.
You know, a lot of people have loyalty with lenders or banks that they've worked with, but a couple things that I would want you to consider. One of the things that we have is that Ryland has a group of affiliates that we work with. We have our own title company, RMC Title, Ryland Title. Ryland Title and Westwood Insurance and Ryland Mortgage, or RMC Mortgage. One of the benefits of working with RMC Mortgage is RMC Mortgage only works with Ryland Homes and Ryland Home Purchasers, no other builders, and they only do new construction loans, so they don't get off track on what other loan programs or any other banking business. You're their only client. The other thing that they have is they have very competitive rates, usually at or below where other lenders are. And then the other thing that we have is that you can also do a program called a rate cap float down, which means you can lock in the current interest rate with the ceiling. And if during the course of construction rates go crazy, your rates won't go up. But if they stay the same or come down, you can relock at the lower rate. Now, does that sound like the kind of a program that would work for you?
That would be awesome to be able to have a peace of mind that the rate can be capped off like that.
Great. Is there any reason why we shouldn't go ahead and get this rolling for you?
Well, the numbers look really good, Alex. I think we're gonna have to do this.
Good.
Right.
Thank you, Viet.
Thank you.